Good morning, everyone. Thank you for joining me this morning for this live pop-up trading session. Let's jump right into it. It looks like we have again an up market. The market is up big again from yesterday. Goodbye, pumpkin. And it we have the S&P up over 1% again, the Nasdaq over 1%, the Dow over 1%, and the Russell, I'm sure it's going to be up over 1% here soon. It was a little earlier, and it's somewhat surprising based on how it felt like the market was probably going to pull back after the Friday session, and then how the market opened on Sunday evening, and then but it's been go 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 since. So the market has been resilient. Every time it seems like it could have a decent pullback, let's say about 10%, the market bounces back and goes in the opposite direction. So we'll see how this continues to play out. We have a bunch of trade ideas that I want to point out this morning. The first trade idea we're going to jump in is soybeans, and let's just bring up this chart here on the soybeans really quickly here. We have you see soybeans has been dropping a little bit recently, but it's still above its 50-day moving average, which is this blue line, this bluish line, and then this is the 200-day moving average. So, but it's down again today, and if you are bullish on soybeans, then this is potentially a good trade that you want to look at. I'm actually going to do this trade today because I like this the soybeans trade. This is 52 days to go. You see that we have something on with 17 days to go, but we're going to also add this 52 days to go. This is right now, it's looking at a 16 delta, 20-point wide spread. Your max loss is about 1850. You're receiving about 150 if you get filled. Your buying power could be insignificant, even less than this, because once again, we do have something on in this position already. So let's send this and see if we can get filled. We're going to let that sit, and then I'll provide a few other trading ideas. So that's going to sit for a second. I believe I'm going to change it really quickly, replace the order and put it in at $3 or 3.00, and then let it sit there for a second, see if we can get filled. And then I want to point out that the market is up kind of big. I put on, all right, so we just got filled in that soybeans position. If you want to hedge it, and you would hedge it in the soybean ETF. It's not a great hedge with this, but it is a hedge nonetheless. So let's see how let's let this populate for a second. These are not the greatest options, but in this case, what we could do to hedge, we could buy the 20, sell the 19. That's going to be $53. That's too much. So if we move this to the 19 and just a little outside of the money, that's not bad, right? That's a $17 hedge if you can get filled at that. And we received over $100, as you know, on that trade we just did. So we'll send this, and just in case it keeps falling, we'll get a little hedge. We might adjust that hedge in a second because we got at least $30 we can use to buy the hedge. All right, so let's look at this ES real quick. You can see that I put this ES short call spread on Sunday night, and it's already about to go in the money. So what we're going to do is we're going to roll this out just a little bit because I want to keep this short delta, but we're going to buy this back and we're going to roll this out. It's going to cost me, we're going to do a traditional type of rollout. If I can get filled on this, it's going to cost me, let me see, I'm going to have to probably take this up to the 25 to get filled. It's going to cost $615 to get filled on that, and I could do a roll away, full roll away, but it was already past the 45 delta, so I'm going to give myself a little chance. So the strikes on that was the 28.15. So if we roll this out here and we go to the 28.15, it was a 20-point wide spread. So it would be this here, and we did it for 12.25. You can see that we're getting 12.25 here. So if I want to roll this out and I was thinking about doing a traditional, but I don't like it because I'm basically at the money still. So if we do a Dorian Way type of roll out, we can do something like this. Let's just see where we can go. Let's go to this 25 delta, 25 points wide, and And then let's go over here and let's see what we can do if we add something on this side at something like this. That's still only giving us $9.50. It cost us a lot more to do that. So we probably have to be a little bit more aggressive on the call side here. And let's just see here, we move this up 20, move this up to the 31, and still not getting enough there. That is unfortunate. Let's see 1 second here. If we did something like this, I don't want to add that much. So we probably, if we were going to do this, we would probably have to go a little closer on both sides. Let's see, 20 point wide. I just see here. That is 20 points wide there. I want to get, and you could see that changed the ball game a lot, right? So we only need 12. We need about 1250 based on what I'm trying to do here. Or I'm going to try to get 10% more than what it costs. Let's say it costs 16. We need about $650, give or take. So right now, this is going to give us 800 and something. So let's see. Let's make sure that I'm doing this right here. We have, all right, so that's good. And then we're going to try to get a little less than what we just talked about. So let's go and see what this looks like here. And that's still 17. That's at the 25. So maybe the numbers were off a little second ago. So let's just try to see what this looks like here. That's a lot better. And that there, still a lot better. All right, so let's actually do something like this and see. I'm looking at the buying power here, seeing which one I want to do better, which one I want to do that the buying power is better.
Brian,
that's
did you still want two contracts on the call side?
I could put, actually I don't want 2 contracts on this call side. Thank you. Thank you, Julie. I don't want 2 contracts on the call side. So let me remove that. And that's only 750. And let's move this up again and see, then maybe that was the problem. All right, so that's 1050. And then let's move this back up a little bit. Let's go here and see what this would look like here. You got 10, 20, and it's still only 11. So we're probably going to, I don't want to go higher than that 30 to move this. So we're probably going to have to just eat what some of the loss that we had on that. It's only 14 days ago. Let me be a little aggressive because I can roll away as well. So let me do something like this. Let me see, would it go up to this amount today? Trying to get that, at least that same capital back. You can see that the buying power is going to be insignificant if I do it like that. And let me just try one more time here. To 40, 20, still not a lot. Let's see if we can get filled at this 50 here. And we're just going to get the same amount back, not including fees and commissions. And then we'll just let it play out that way. So that is the trade. We'll let that play out. All right, so they filled us on that. So that's not bad. And all right, so we're down a little bit on it today, but that's fine. And we have a position on that expires in 10 days on the put side. And then we added this right here. So we're gonna be aggressive with the next 14 days to roll these away. If these become, if one of these becomes a little over the 40 delta, then we'll do a full roll away to kind of buy some time with this 14 days. All right, so the next trade, thank you again, Julie. The next trade I wanted to point out is this morning is an Apple trade, and let's see if it still looks like it can be a decent trade this morning. 31 days to go doing what we call a bullish put spread with bearish delta. So buying the 129, selling the 128. That's the bearish part of it, because this is a bear put spread. We bought the put spread, and then selling a bullish put spread. We're selling the 121, buying the 115. And so I wanted to do this for a little bit more capital than what it's showing now. So unfortunately, the market would have to come down for this trade to work. I wanted to do it for at least 101. It was trading a little better than that earlier. So do not like that trade at this point. If we move the bearish part down a little bit, maybe we can get a few more dollars. Let's see. The bearish part would have to be pretty close. As you can see here, you'd basically be at a 22 delta if you did it, and then that way you can get the 101, but you're not getting as much of a hedge delta wise between your short strike here and this put spread. So don't like that trade as much as I was looking at it this morning. We had the Airbnb, have Airbnb again this morning, 17 days ago. I like this trade right here. As you guys can see, this is the 16 delta on the put side. It's a put spread. I would move the price in some to get at least 103, so you can get $100 after fees and commissions. And then if you get filled, you can see this can be a really good trade. 5-point wide, only buying power is only 397, and that's your max loss. I like this one. If you can get filled at least 103, then it's a good trade, and then you can go into the QQQ and hedge it. When I mean go into the QQQ and hedge, I mean go like this and go to that same expiration period, 17 days, and go to the 30 delta on the put side. And if you don't have a 30 delta, do something very close to it. Do a 1-point wide spread. As you can see here, you can use up to $30. This is 22, and it'll hedge you about $78. So that's what I mean about doing that hedge. And then next trade that I have this morning is a bullish put spread with bearish delta in the NQ. I really like this trade here with 45 days to go. This is, let me set this up for you. So buying the 12,680. Give me a second here to get there. Buying the 12,680, selling the 12,670. And then that's the bearish part again. And then selling the 11,750. So selling the 11,750. Get there really quickly, everyone. Selling the 11,750, which is way down here. And so selling this one and then buying the 11,700. So in doing two of these, and so you can do this for, I had it this morning at 950, but I still like it around 850 because you're still getting over $100. It's jumping around quite a bit, so I would put my price in about 950 and then work it down. But I really love this trade. If you're on the Tastyworks platform, you have to do it as two trades. Buy the put spread first and then sell the put spread. On Thinkorswim, you can do it as one trade, and that's obviously ideal. All right, so next trade that I have this morning is a Boeing trade, and this is a long dated trade, an earning type of special, looking at 353 days here and selling a naked put. We're going over this a little bit last night. This is something that I would sell a naked put in. We're going to the 85 days. If we base it on earnings type of criteria on these, you can see that over the last 12 months, or over this, this is the 1 year chart. The low was 89, and that was back in March of last year, when the pandemic hit and so forth. So in this case, you would be going lower than that. You were going to the 85, which is right now a 4 delta. So basically gives you a 96% chance of winning on this trade. And if you put it in at the mid, you can probably get this for about 213. and the buying power effect is you're getting way more than 12% on your return on capital. And then I like this Boeing trade for long term. Okay? And then if you have to own it at 85, it can be a good long-term trade at 85 as well. All right, so the next trade that we have, this was recommended. I forgot who did it. It could have been one of the Danas that talked about this stock here. So 45 days ago, being bullish on this. Let's look at it on the chart here. ARKK. Type this in, excuse me. All right, so you can see that it's above its 50-day moving average, which is the bluish line, and its 200-day moving average, which is gold line. It's basically been trading in a range for about maybe 2 weeks. It's going up the last 2 days. It kind of jumped up a little bit today, but I still like this put spread with 45 days ago. You can see that if you can get filled at this, the mid is 133, the buying power effect is 889. You will receive way more than 12% if you do this trade. So I like this one. If you get filled in this, I would hedge it in the SPY. And what I mean is just go into the SPY, go with the 45-day range, and then just buy, once again, a put spread in the SPY with 1 point wide using about $30, and then that can hedge you a little bit. All right, so the last trade that I have this morning is one that recommended last week that we looked at. This one right here is, I'm looking at doing a bionic bull, somewhat long dated, 108 days from now. It's up 12 cents today, which is 5.5%. That's really good. I know 12 cents doesn't sound like a lot, but for a stock that's trading around $2, that is a lot. And so if we do this bionic bull, and you can do this bionic bull for credit, right? You sell the put side at the 2.5 strike, and you buy the put side, the call side at the 2.5 strike, and you do this for a credit of at least 20 cents, as you can see here, and your buying power effective will be pretty insignificant, and you will have all the upside from that point from right now, because even though you're doing it at the 2.5 strike, you're doing this for credit. So every time this moves up, you should make some money. Okay, and if it goes up, let's just say it goes up to 5, it's a 50% chance it's going to go to the $5 range within the 108 days. Then that's pretty awesome, right? That would be a great trade. It's a 35% chance it's going to expire above 750 in 108 days, so you'll be able to benefit from that as well. So I do like this trade. All right, so let's jump back over here and let's see that we have this market shooting up again, even more. It's on its highs. The ES, we have the high was 38.18. It's now basically right there. The Russell has fallen though. That's the only thing that's it's coming off its highs. It's only up at 1 point. We'll see. Maybe that's a buying opportunity for the Russell. This riot trade that a lot of us in, it's basically flat on the day. And then we have a Russell trade that we have on in here that is doing well for the last couple of days. It was bullish, but we do have a bearish component to it. This 5 short call spreads, and it's doing okay right now. You probably can't see this because of the highlight, but we've made about $600 on the spread so far. And then, but the put side is still elevated. We haven't made any monies on it yet, but it's about $1,000 in this put spread within the next 17 days. So hopefully we can get out of that and make that capital. And then we have this put spread that's expiring in 3 days. It's about a little over $200, $260 or so still left in this trade. So we're going to try to get that out, a decent amount of that, and then we'll ring the register the next 3 days. And then let me see, we talked about that soybean position. It's 2 different ones. The one we just put on is 52 days ago, and the one that we already had on is 17 days ago. And we are doing okay on both of them right now, with the soybeans down about almost 1.5%. All right, so any questions before we conclude this this live trading session? Please note I will be sending out all those trade ideas right after this call with the recording of this, or if not with the recording, at least I'll send out the trade ideas immediately. Any questions before we conclude?
No, but
Hey,
thanks.
Brian, this is Greg.
What was
Hey,
that, Dana?
Brian, what was the soybean strikes again? It was 1,200 and 1,220.
Yeah, the soybean strikes with 52 days
ago.
ago. It is, the strikes are the 1220 and the 1200.
Okay,
The
thank you.
1220 and the 1200. And okay, you're welcome, Gregory. Please note that I did hedge that in the soybean area, but I haven't got filled yet, as you can see. So I'm going to move that up a little bit to get filled. Let me see if I move it to 18, see if they'll fill me. It's a wide, you can see that this is very wide, and the options on this is really poor, which is unfortunate. But I'm going to put it in at 20 cents. And then if I don't get filled at 20, I'm just going to let it sit and then just deal with it. All right, so there we go. We're going to let it sit at 20. And if we get filled, then great. If not, then no worries. But you should get filled in that on that position if you're going to do it on the futures position. All right, Dana, you were saying something?
I was saying I did that tattoo trade.
Okay, awesome. I like that trade long term. It's speculative, but it's only requiring a very small amount of money to potentially make quite a bit. So and MM has recommended a number of good things, just like Duvel. Some speculative stuff, and when we come out with the numbers of who had the best percentage for January, you'll see that those two are killing it right now.